All right, everybody, let's get to it and pull that tarp. My guest today is technology entrepreneur Howard Katzenberg. Welcome to Everybody Pulls the Tarp, Howard.
Thank you, Andrew. Glad to be here.
Howard, it's great to have you. Where I want to begin, you got into financial technology, commonly known as fintech, in the early days. In many ways, you are an industry pioneer. I'm curious, Howard, have you always been drawn to kind of early ideas and early concepts?
Yeah, I think since I was a kid, I always like tinkering around with whatever the latest Atari was or the Commodore 64. I remember like signing into Prodigy every day, with the modem and checking my stock like quotes and the sports scores. So I've always been entrepreneurial. And listen, I kind of got into fintech before it was even a word. Right out of college, I worked for American Express. In there for initially kind of doing venture capital, but then I moved on to their business development arm. And after business school, I started working for a company called Swift Capital, which was like a neobank before its time. And then I joined OnDeck in 2008. And like I said, like even then, fintech was not a word yet. OnDeck and some of the other companies around during that time really helped pioneer that burgeoning industry.
Howard, when you think about the early days in your career, and you think about some of the work that you did and the opportunities that you found for yourself, are there things that you think back to and say, I really did that well, or I wish I hadn't worried so much about that? Like when you think about those early days of your career and how it set you up for the success you've had since, what comes to mind?
I feel like you put a lot of pressure on yourself early days to perform well. And it's like, all right, well, if I want to get my MBA, I got to have this level of experience. I got to do these outside activities. And you're almost like measuring yourself against some expectation of like what the mold is. And I feel like, especially in my early 20s, I would probably like start discounting my own potential and capability. I got to be on this path. But I've always been like a smart, curious guy. And I think, I had to like gain that faith in myself, I suppose, by doing things like non-traditionally, and just like putting that trust in myself. So I think, my advice would be, don't necessarily try to fit in that mold and be like, all right, I got to get 4 years of experience before I apply to get my MBA. And at my MBA, I need to do these things and join these clubs. Like I tell my kids now, like just do what feels natural for you. Do the things you enjoy. And I would, I'd give myself, Howard in his 20s, I'd give him that advice as well.
So let's unpack that a little bit, Howard. So doing things that feel natural, doing things that you enjoy, not necessarily following whatever the preconceived mold maybe is for a certain career path or something. How did you put it all together though? How did you stay focused and make sure that you weren't kind of going off in all these different directions, following passions that may have led you astray and not enabled you to chart the course?
Well, I think you look at my background and it's like worked at American Express, right? Then went to get an MBA, then worked at Swift, OnDeck, Better. It seems very linear, like, hey, it was very focused on the lending industry. And now with my latest gig, like I've transitioned to being a founder, but like, it wasn't linear. And I don't know because I'm very entrepreneurial, I don't know if I had the discipline to be linear. It kind of worked out that way, but it wasn't necessarily purposeful. There were other, before, I'm trying to think, like after my MBA and before I started at OnDeck, there were like two other opportunities that were not lending related that I kind of pursued. And even during my MBA, I tried to start a business like that had nothing to do with lending. It was a biotech company, and it failed. Right. So like there's ups and downs, and I think just maintaining perspective that like that's just part of life. That not everything's going to be linear, and like things will work out if you try to maintain perspective. That listen, if it doesn't work out, I'm going to learn from the experience, and it's going to make me better prepared for whatever I do next. So, my career has not been as like purposeful as you would think. But I think each experience has just made me a better leader, better like business person, and probably just a better person overall. So I don't know if I answered the question, but it's tough to be so purposeful and linear when career planning.
I think you did answer the question, Howard. And I'm curious, when you look at different decisions that you've made at different points through your career, and we're going to get into what you're doing today, because that it's really exciting, and it's in many ways a pivot, and it's also in many ways kind of just a continued path, like you've talked about. But when you think about different roles and different business opportunities that present themselves to you, how have you kind of made those decisions?
Yeah, it's a great question. So, generally each opportunity is a little bit different. So I think you have to ask yourself, like, where you are in your career. So, like, coming out of college, I had a couple of different opportunities, and for me, like, what was really, really important was not like the compensation. It was not even the company. It was like, can I learn? How quickly can I learn? And I was given the opportunity to work in American Express's venture capital group. At the time, this is like 2000, where it was the first like internet bubble. And that's where the action was. And I knew, listen, if I could be working with these portfolio companies, also working within a big enterprise framework, like, I'm just going to like be able to learn so much at this company. And that was the approach I took. Of course, American Express had like a great brand and it's like an awesome reputation for training people. So that factored into my decision, but I got paid like not that well, right? But that to me wasn't important. Now in my career, well, not as a founder, but like, now that I have a family, I have a mortgage, like, compensation would be much more relevant to me. But now, I think the advice I give most people is like, you got to figure out like what's most important to you. For me, it's always like the people first, right? I need to be able to work with whoever the CEO is, whoever like the team is that I'll be managing. It needs to be natural, and there can't be like conflicts right off that you feel right off the bat. There needs to be that natural chemistry. That's test number one. Test number two is like, do I really believe in this product in the market, right? If you're joining a venture-backed startup, that's a really important question to ask, because like the team might be great, the product might be great, but if there's no like scalable strategy, or the unit economics are backwards, like that's going to present some challenges along the way. So I think you have to feel good about the company with respect to its market opportunity. And then third, I think, what do you want to get out over the next 2 years? What do you want to learn? Well, what are the soft skills, the hard skills, the people management skills that you can get from that opportunity that you may not have yet? What impact do you want to have on the company? Can you define that? And like those are the things that I generally counsel other people who are looking to make shifts right now in their career to really like think hard about those three elements. And then, if those are all successful, then you can get in the weeds on like day-to-day responsibilities, compensation, benefits, etc.
Howard, I'm curious. I'm thinking about back to your early days at American Express, and you come out of college, and you've got a great education, and you're at a big company, and there's probably, like you said, so many opportunities to learn. And this podcast is called "Everybody Pulls the Tarp," and it's all kind of loosely connected to an experience I had in my first internship while I was in college. And people who listen regularly know this story, but I wanted to work in the front office of baseball. I applied to minor league teams, and on the first day, the general manager said, "You're going to learn a ton this summer, but one thing I need to make sure all of you know is that you need to keep a pair of old clothes in the locker room so you can help the grounds crew pull the tarp on and off the field, because in the minor leagues, the grounds crews are much smaller than the big league counterparts, and everybody has to pitch in." And it wasn't just the pulling the tarp on and off the field that summer that was a surprise. There was so many other things that I got exposed to at the time. You're kind of wondering, like, well, how is this helping me get where I want to go, right? I was setting up moon bounces. I was driving the players' spouses to their condo complexes. I was hawking merchandise, dressing as the mascot. And as I went on in my career, I started to realize these things really were more transferable than I thought. These things were the fundamentals of customer service and client service and responsiveness and communication and really being engaged in what you're doing. Like, there were so many things that I learned that I apply today in a completely different field. that I didn't even realize at the time. When you think back on some of the work that you did at American Express in those early days, are there examples that you can think of where you learned lessons that you may not have realized at the time?
So I'm glad you brought up baseball. Like two things kind of come to mind. First is like just advice I give my kids right now. They're on a travel baseball team. And when I see them sitting on the dugout or talking, like being distracted, I'm like, come on, guys, you're part of a team here. And like you need to be rooting on your teammates and doing everything you can, help out the coaches, cheer. If someone strikes out, go talk to them, give them like a pat on the back. So like what you're describing, I'm trying to impart on my 11-year-olds right now. The story that comes to mind from American Express is also kind of baseball related. I had worked in the venture capital group. That was like my first job there before I moved over to do business development. And, the bubble burst basically a couple months after I arrived. I don't know if it was related to me or something else, but most of the portfolio companies that we had invested in were experienced like a lot of challenges, raising capital, signing new customers, retaining like their employees, et cetera. And, we had invested in like 40 companies in over a pretty fast pace. And I was on the team that was like responsible for managing the relationships post investment. And at one point, the market had gone down like 40%. And, we like basically it was me, it was like a VP and one other like analyst on the team. And what we needed to do was just like really do a deep dive of each opportunity that we had previously invested in and kind of see, all right, how are they doing? How can we help them? Is there anything strategically that we can help them with within American Express? And like there was urgency around this because like we had a report, like basically the division, like the sustainability of the team we were on, like really depended on the results of this analysis that we would do. And this took place during the Subway Series. Mets versus Yankees never happened before, right?
Year 2000.
And it was 2001, right? Like I'm a huge Mets fan. And there were games, I missed the World Series, but like I felt like, we would order pizza, listen to the radio on Saturday and Sunday nights, working as a team together. And that experience, that just showed me like, it wasn't just me stepping up, but others on the team as well. That, I look back and like that really, having gone through such like a team building experience and like, I really need to step up here. So early in my career, it has served me well throughout when, I try to, like you got to wear especially at early stage startups, like you got to wear multiple hats, right? Don't complain and you'll be valued by all the contributions that you're making, not just by kind of your bosses, but your peers as well. So anyway, that's two relevant baseball stories for you.
There you go, Howard. Let's fast forward a little bit to your days at OnDeck. You're the CFO. You were the CFO at OnDeck during a period of just extraordinary growth through its IPO. And again, like we talked about, at the top of the conversation, in many ways, OnDeck was at the forefront and an industry pioneer in fintech. I'm curious, when you think about like a company like that starts small and experiences rapid growth, what were some of the bigger challenges that you had that you faced over that period of time?
So I think like you have to be any entrepreneurial company, even one that like OnDeck that looked like it was going up and to the right for most of its trajectory. Like that's just not the case. You always get punched down, as a startup. And so many things happen. So like you really need to have the right temperament, the right expectation that like, listen, it's not just up and the right. It's really a true roller coaster. You can't like celebrate the highs too much. You can't get down on the lows too much. And like things, it's just inevitable. It's part of the job that you're going to run into obstacles. And, there's so many times at OnDeck where like we had term sheets pulled from lenders. And I remember my CEO basically saying, listen, this is, how you react to adversity is really, how you grow in business. And, ultimately like it's a true test of character. So listen, I think when I look back at my OnDeck experience, what I'm most proud of is like, it was a great outcome. We hired a lot of people. The business is still around today, but it's like the resiliency that I learned going through it and like managing through the uncertainty. And when things were good, keeping level-headedness and be like, hey guys, we just IPO'd, but now like the job's really begun. Like it's like the wedding, but now we're married, right, to the public markets. And even, you know, in those low moments where you think the world's going to end, like keeping some poise and knowing, hey, you know, we'll get over this. We have to maintain a, like, you know, good balance and perspective. So I'm most proud of kind of that.
In many ways, Howard, I go back to another baseball analogy, right? I mean, the best hitters in baseball, you know, only get a hit about 30% of the time, and it's about managing, you know, the downs and the ups in anything. And it sounds like, you know, what you're saying there is it's the same way in business from your perspective, and it's especially true in the startup world. Lots of ups and downs.
Yeah, no, for sure. I mean, I feel it now even more as a founder of an early stage startup that like, hey, you know, big business development deal we're working on, and then there's like a reorg at the company, and it's like, all right, well, we got to start from scratch there. It happens all the time, but like I think resiliency is such a key trait for any founder to have.
So Howard, let's talk about that. So you've launched your own company now. You've essentially taken a problem that you saw firsthand, you know, very frequently as a CFO, and have now decided to apply your experience in technology and building companies to start your own company. You're the founder and CEO of a company called Glean. Tell me about Glean, and tell me about that moment where you said, I am going to go build something to solve, you know, a problem that I know really well.
Yeah, great question. By the way, it's Glean AI. There's a couple other Gleans out there, but so like I said before, I've always been entrepreneurial, but like I was also a CFO, so you know I'm risk adverse too. So all the opportunities I had been presented with previously in terms of like founding my own company or joining like a very early stage startup, the ideas were never, I don't know, I didn't feel like I had necessarily an unfair advantage. And therefore I continued kind of on my CFO trajectory. With Glean, when I was at the CFO of Better, we were spending, basically the founding story is that we were spending a lot and our burn rate was increasing. As a CFO, I would see our cash balances like decline every month, and I wanted to have a contingency plan in place in case like the growth didn't materialize that we were expected. And thankfully it did. And Better in late 2019, 2020, it was a completely different company than when I started there, and it really helped kind of turn it around. But nonetheless, when we looked at like, all right, where can we cut from a spend perspective? Of course, you can do your analysis on the existing headcount, but then there's always that big bucket of third-party spend. And I naively assumed that tools like Bill.com that had all our invoices did some analytics. And if I wanted to find out when does this deal renew, that would be there. Or what is our pricing for what we're purchasing? How much are we purchasing from a volume perspective? I went onto Bill.com and I went to the reporting section, and the only report I could download was an AP aging, accounts payable aging, which as a CFO, I didn't necessarily care about. What I cared about was, do we have the right vendor relationships? Are we purchasing things that make sense for our business? Do we have a good deal? And, are we driving ROI ultimately? And I realized there was no software tool in the CFO stack that could do that. And as a result, my team and I embarked in like a manual audit of our vendor spend, where we printed out 4 months of invoices. We went line item by line item, going through each vendor relationship, each purchase, like each individual item being purchased. We came up with a bunch of questions that we had for the people that managed the relationship and kind of could talk to whether or not we were seeing ROI. We'd sit down with those people, and through this back and forth, we found about $1.5 million of annual like savings. And at the time at Better, it's probably about a $20 million run rate. So it was a really productive exercise. At the same time, my team hated me because it was extremely manual and like just tedious. But reflecting on it, I said like, why can't software do what we just did? Like, we're basically looking at these tables on machine readable PDF documents, invoices or receipts, doing some time series analysis on what we're purchasing, how much we're purchasing, unit pricing, dates, etc. then generating questions or insights based on our analysis, and then seeking collaboration and input from our teammates. So my vision for Glean was basically, hey, can I build software that does all of that and like automates that whole process, as opposed to doing it manually. So that's really the vision of Glean. Our customers call us Bill.com with a brain. And I felt I knew the problem myself as a CFO. I had done interviews with my other folks in my network just about, hey, is this is vendor spend a problem with you as well? Across the board, everyone was like, yeah, we know there's waste here. We just don't have the resources to figure out where the leakage is. And that gave me a lot of conviction that I was onto something here. So, I felt like I had that unfair advantage to be able to be the founder here, really visualize what the product could do and should look like, bring on the right team. And now we're about 2.5 years into it, and it's been great. I'm really happy I made the decision.
It's so cool, Howard. You used that phrase there a couple times, unfair advantage. How can, for anybody listening, how can someone find their unfair advantage and put it to work?
Yeah, I think, it could come in a couple of different ways. One, like for me, is like I lived this problem. And therefore, like even before I started Glean, I was telling my team, like, why isn't there software that does this for us? So I could visualize that problem. Like, so the awareness of the problem that you're like solving is certainly helpful. Having relationships, like I could go to 10 of my close friends who worked in finance, like leadership roles also, and ask them about this problem. I could show them prototypes of the designs we were making and get their feedback. Through those relationships, many of my friends in finance became our initial beta customers. So that was like an advantage. We're having this conversation now because you and I used to work together at OnDeck when you were a consultant there. So I think relationships, just product knowledge, distribution partnerships, and then experience with the problem. These are all forms of, I think, unfair advantage that you can bless yourself with.
It's interesting, right? I mean, it's so often it's about figuring out like what are all the ingredients that you can put together, because I think what many people don't realize is with a little bit of thought, you can find that formula. You can find that thing that gives you a little bit of an edge over other people, or why you're more destined to do something or solve a particular problem than others. I'm curious though, Howard, as you think about the transition from kind of finance and business development roles, CFO roles in particular, most recently, now to being the CEO, what has been the biggest transition in your mind from the two leadership roles?
I've had to unlearn a lot of my CFO qualities.
What do you mean by that?
If you think about things that make CFOs really good, or just like stereotypes for CFOs, they're very data driven. They're measured in terms of making decisions. Their relationship to risk is usually risk. Risk management. It's not necessarily risk taking. It's not necessarily risk adverse, but like taking calculated risks. You often want to do that with data. As a founder, you have to just break things. You have to put push code, test, break, iterate, right? And unlearn that need to have so much data. Now, that doesn't mean we always go on instinct by any, at this point of the company, that would be very damaging for us, but you have to be able to go between some initial signals from the data and, good logical intuition and why something might work or may not work. So that, I think that to me was hard at first to unlearn, but now I think I maintain a good balance of the best, CEO qualities plus the best CFO qualities.
Howard, I've asked a lot of people about this concept of balancing instinct, your gut with data and analytics. I've asked it to athletes. I've asked it to executives. And it's something that I'm always curious about. How have you been able to strike that right balance?
Well, first off, I know my profile. I am someone that I don't care. To me, it's not important that I'm right. It's more important that we get to the right answer. And like, I've done enough personality tests to know that like, I just want to get to that right answer. So I tend to be very, like, I raise my hand and say, I don't know a lot, right? But then I want to have that discussion, like who can make that best argument, where like, it's not just me being convinced, but everyone around the table being convinced. And even without great data yet, it's like, right, where does just like the logic end up here? And generally, I think at a company like Glean, there's a lot of ways to do things, or a lot of features we can build. And sometimes like, we're not going to have perfect information about, all right, if we build this, what the immediate impact will be. So we'll have to, find frameworks and just like understand like who's making the best argument, but also say, all right, listen, if we had 100 chips on the table, how much would you put here? We have to find ways that can accommodate to help get to that best decision. So I don't know. There's no easy answer to that, but I try not to go on instinct most of the time, and just go based on whatever data I do have.
Where does that come from? Your kind of your comfort in being able to raise your hand and say, I don't know. You pointed to that as really a strength. And how have you always been that way? Is that a tendency that you've had to learn to resist? People look at you as the leader. I'm curious, where does that come from?
Listen, I think you can actually build credibility when you say, I don't know. It's always, people have good bullshit detectors. I'm sensitive to that. I don't want to jeopardize my credibility with my team or others. And I think, everyone feels like they don't know a lot. I don't say, I'm honest about it. If I have a strong opinion, I'm not going to say I don't know. Like, this is why I believe this. But at the same time, if I really am uninformed on something, paid search, for instance, I am not an expert by any means on paid search. And I look to defer to people who are, and I'll trust their judgment on things. And that's something like where they're hitting on right now, paid search and SEO. So listen, for me, that's just who I am. Like, and it's more natural for me to say I don't know than this is the way it is, and kind of just fake it.
Yeah, it's a great point there, Howard. Being able to say I don't know can be a powerful credibility builder for leaders, in any industry or in anything. Howard, this has been so much fun. I've known you for quite some time, and it's always awesome to see where you continue to take things with your career and the businesses that you're involved in. It's been so much fun breaking it all down with you. We'll have to do a part 2 sometime. All right, Howard?
Yeah, I'd love to. By the way, on the I don't know stuff, it's not like you can't just stop at I don't know. It's like, I don't know, but here's the things I'm going to do to get to an answer or figure it out, right? That's really important as a leader. Like, I don't know is a good temporary answer. It's not a good permanent answer. But Andrew, I really enjoyed the conversation today. I look forward to the next one.
Howard, that's such a great point. I'm glad you made that, because it's not good enough just to say I don't know. It's saying I don't know, but showing the leadership, and the willingness to get your hands dirty to find the answer, and that is such a important additional context there. Howard, like I said, this has been so much fun. I've enjoyed following your career, and I know you're just writing the beginning of your story still in many ways. So keep pulling the tarp, Howard, and we'll talk again soon.